All right, right on. Let's see here. I'm going to go ahead and record this. Oh, it is recording. People are still coming in. Thank you for attending. I'm Justin Botillier, CEO of Calyx CPA, and this is Jamie Jorgenstone, our Chief Technical Officer here at Calyx. And this is a follow-up to the MJ Biz webinar that we did on the 20th. And for people who still had lingering questions, we kind of prepared this follow-up Q&A webinar to take people's questions in which they didn't get to ask last time, and then maybe roll with that. There should be a panel for people to be able to ask those questions. So let's see. Open questions and answers, open answers. Okay, no open questions just yet. So whenever you're ready, feel free to ask your questions, and then we will pause what we're talking about and answer those. For now, we'll just chit chat, I suppose. We can talk about what's happening with the administrative hearings.
Mm-hmm.
A lot of people have been saying that the final determination is going to be August 15th, but we know better. Jamie pointed out to me that the last time a similar administrative hearings, besides the Biden hearings, which got abandoned essentially, the last time they had administrative hearings similar to this for rescheduling cannabis, it was in the 80s, right?
Mhm. Yep. It
And
was a very long process. So,
yeah, do you want to describe a little bit about what happened there in the 80s?
yeah, it was like kicked off. My understanding is it was kicked off in the 70s, like early 70s, when Normal filed a petition, I guess requesting, the rescheduling of marijuana. And then there were, I think, lots of lawsuits that followed. And ultimately, the result was in like 86, finally, administrative hearings started. And then that took, I think, a year or so for that process to be completed. And then in 88, so then another year went by before the administrative law judge actually gave their ruling or their decision. I think it's technically called a recommendation because they don't get the final say. So then that happened in 1988. And then in, I think, 1989, the DEA kind of rejected the recommendation.
Mhm.
So it
Mhm.
was like a
Mhm.
17-year process from the first petition. But even from the hearings starting, it was you know, about 3 years before it was kind of put to bed. So we don't know, it seems like this process is maybe going more quickly this time around.
Mhm.
But we don't have any sort of there's no like requirement for how quickly the judge has to give the recommendation or
Mhm.
how quickly the DEA has to then kind of give its response. So we're
Right.
hopeful, but
Well, and
not
right
that
now
optimistic.
they're receiving like brief submissions, right? Like responses to the hearings.
Yeah, there's briefs, right?
And so that's what the 8/15 deadline is that they're receiving those comments or briefs. I'm not sure what form. Of course, we're not attorneys, so we don't know
Hmm.
all the legal stuff, but it sounds like that's what's happening. And then whether or not how long it's going to take to make a decision after that, that is where, we don't know. And then, but when we were doing some research about like what is the timeline around that, the what we came up with was that like
Hmm.
in the 80s it took
Hmm.
17 years.
It took
So I
17
doubt
years.
it's going to
Yep.
be something similar to that, but it could be. So we
Yep.
do have some questions. Anonymous attendee. We get questions from this anonymous attendee. Now, anybody could submit a question. So for those of you who are just joining us, there should be a opportunity to ask questions in the Q&A, and then it can be anonymous if you want to. asked that question. So we do have a few. Let's see here. I'll go ahead and read these, and then Jamie, you can answer them if you want to. So, there's two. What is the reasonable basis assumption to make when a cannabis business files an amended tax return for claiming 280E from the date of license or for previous 3 years as applicable? Did you understand that question?
I think I kind of understand it. I think it's getting at, what is the argument that there's a reasonable basis. And I think I'm going to start with kind of the last part of the question,
Yeah, it
which
says
is
from the date, it's
the date
almost
of
like
license.
it's saying from the date of license or for
Yeah.
previous 3 years as applicable.
Right. So the
So
statute
that's
of limitations, I
okay.
think there's a couple things probably they're alluding to.
Yeah.
So the statute of limitations usually
Oh,
is
okay.
open for 3 years, right?
Mhm.
And so I think that's probably an assumption here. And from date of license, maybe that's referring to in the rescheduling order how the it was encouraged or highly encouraged that relief was allowed retroactively to the date of licensure for medical operators.
Mhm.
So, I mean, the reasonable basis, that was really what we got into in our webinar from on July 20th. And if you want all the details on that, I think it's best to rewatch that because it's a pretty intensive and detailed argument. But I think the bullet points are that because of, I mean, I don't know which are the most important reasons to point out. Because of many
Probably the
reasons.
statutory language that's currently in litigation via the New Mexico Top Organics case. That
Yeah,
would be like to me the
the
biggest
biggest one.
thing, which does argue that according to the HHS
Hmm.
sent the letter backed by the FDA support 250-page document saying that cannabis did not fit the criteria of a Schedule
Right.
1 substance. It fit the criteria of a Schedule 3 substance, and
Yeah.
therefore it does not meet the statutory. So according to our interpretation of the statutory language of 280E,
Hmm.
280E doesn't apply
Yeah, 280
because
doesn't apply because marijuana does not fit the meaning
yeah,
of a Schedule 1 or 2 substance, even though it's currently
yeah,
classified as one. And then kind of the update to that is, of course, the partial rescheduling of marijuana, which
yeah.
goes into detail and supports that, supports that. It says actually that's what the DEA is arguing is that marijuana does in fact have, medical use and it should be Schedule 3. And it's kind of, unreasonable to bifurcate medical and recreational marijuana because it's
Right.
the same substance, right? So whether you're medical or recreational operator, I think you have a reasonable basis to
Have a
file these
reasonable
returns.
basis. Yeah.
Medical operators have always had a little bit of a stronger argument because there's been specific budget writers and various different language that supports specifically medical marijuana as kind of more exempt from the federal laws and enforcement. And so they've always had a stronger argument, but the arguments that we're exploring really do apply to the industry as a whole, as long as you're operating within like a state legal market.
Well, and there's now, and then the one thing that we didn't get to discuss as much, Jamie, in our July 20th webinar is how this rescheduling is going to impact these companies in the various states, adult use, medical use, or mixed. The thing about the Attorney General encouraging the Treasury Secretary to allow amendments for now medical marijuana licensees
Mhm.
it's kind of a big deal
Yeah.
because he's saying that, hey, we're going to try to allow people to get their money back. Meanwhile, the statute of limitations are ticking. That's some of you guys may be getting a little bit fatigued from our emails saying, hey, time is running out
Hmm.
around these. And it's because while we wait for IRS guidance to say yay or nay on allowing us to amend returns, 2022 is expiring, right? So, so that's partly the reason why we would say that there's reasonable basis for trying to amend your return so that you can keep that statute open. You can do protected claim for refunds and those types of things, but
Mhm.
and we can maybe talk about that in just a minute. But one thing we didn't get to talk about is that how does that affect the states that are adult use only,
Mhm.
mixed medical and adult use, and then medical? And Jamie, you want to take a turn on talking about that, or should I just keep?
I'm not 100%
Oh,
following
okay,
where you're
great.
going with it,
Good. Then I will
but
tell you. I
so
will
you
tell
keep
you.
going and then I'll chime in.
Um, so so medical states obviously like a good idea to amend much more reasonable basis, much more basis for attempting to recapture lost deductions in with the potential that the IRS is going to allow amendments to
Mhm.
recapture lost deductions. Now, mixed states with adult and medical, we're not so sure, except for the fact that, like in Oregon, where we're at, my current understanding, and nobody has corrected me on this, and I talked to many people in Oregon, right, about the cultivation process. And in Oregon, even though there is limited canopy that's allowed for farmers that have a medical designation to grow a certain number of pounds of product or have canopy space, the testing and the packaging requirements are the same. So
For
that,
medical and recreational.
yeah, they're the
Yeah.
same,
Mhm.
meaning the adult use has to meet the same standards of quality and care that the medical cultivation does.
Mhm.
Okay, and so then if that's then sold to a dispensary that is both able to sell medic to patients in the medical program and also to people who do not have a medical card, the adult use, then what the IRS is currently, well, actually, the IRS isn't saying anything at this point. I am extrapolating, kind of thinking, okay, how will the IRS respond when they finally do give us guidance? What are
Mhm.
they going to say? Well, if they want to, if their conclusion is going to be in the IRS's favor, they're going to say, well, the adult use sales are Schedule 1 and
Mhm.
should be treated as Schedule 1. And the medical sales are going to should be treated as Schedule 3, not subject to 280E. So there's going to be like this whole process of proportioning out how we apply overhead to these tax returns. Okay.
Mhm.
That's what the IRS is going to maybe want. Now, we don't know that. That's my feeling.
Mhm.
But we could say, listen, that doesn't make any sense because how could a flower or substance that it's the same product, and you're saying, well, that same flower, if bought by a person with a medical card, is Schedule 3, but if it's not bought by a person with a medical card, it's Schedule 1. That doesn't make any sense. The same substance. So for people in states that have medical and adult use, I suspect that we have just as much reasonable basis to amend as the states that are purely medical.
Mhm.
That's where I'm trying to go. Now, I
Yeah.
know some states have more rigorous cultivation requirements for medical than for adult use. So that might be a little bit more difficult to argue. And if you're purely adult use, then you pretty much have to default on our traditional reasonable basis, which is just saying that cannabis as a whole
Mhm.
isn't, it does not fit the meaning of a Schedule 1 substance, and therefore 280 doesn't apply. Okay,
Yeah.
thank you.
Yeah,
That was
I think
long,
I agree with
but
that. I think the argument that there's a reasonable basis to not apply 280E to your tax return as a cannabis operator is pretty much the same, like almost across the board, right? Of course, as of right now, though it's being challenged, medical marijuana is Schedule 3 has been rescheduled. And so then, as the law reads right now, there's really no argument otherwise that 280E would apply. But the reasonable basis is kind of the same. It's just whether I think the likelihood of success is a little higher for medical, right? Because
Mhm.
and this is part two of this anonymous attendee's question, and so
Yeah.
I'll read it, and I think it's very relevant to what we're talking about.
And for everybody else, please consider asking a question.
Mhm.
Oh,
So it
yeah.
says, as a recreational cannabis seller, can someone file an amended tax return to claim non-applicability of 280E? And if so, what reasonable basis assumption will be considered favorably by the IRS? Can they deny a reasonable basis stating that recreational is still classified as Schedule 1, despite the argument that cannabis has medical substance, not addictive, and not dangerous? And the answer is yes, they can deny it. So that is definitely a possibility, right? So you can file what the reasonable basis gives you is it gives you the ability to take a position on a tax return and avoid penalties associated with that position. So it doesn't guarantee the success of your position. And in fact, to meet the reasonable basis standard, you have to have a likelihood of, it's not actually defined this way, but generally it's accepted as around like 20 to 30% likelihood of success if it were, challenged, if that position were challenged. And that doesn't translate to the IRS is only going to accept it 20% of the time. It's more like if this were actually challenged in a court and the law was being considered, what would the likelihood that your position would be successful? And so it's low, but the point of that is that you can go ahead and proactively file these tax returns taking this position. It's an aggressive position, but as long as you have the reasonable basis to take the position, which means your position is like it is based upon some kind of recognized authority, and it's not just kind of a random position you decided you wanted to try, then you're safe from penalties. So that's the big thing. You're not going to have punitive action taken against you.
Yeah.
Now, the IRS can do a couple of things, right? The IRS can deny the position. They can theoretically also say, we don't think you have reasonable basis to take this position. And then they can try to penalize you for that. But it's important to know that you don't have to just listen to the IRS when they say you don't have a reasonable basis. They don't get to unilaterally decide that, right? So um, it's a pretty, well researched, well documented position. It's being argued in courts right now. It's kind of, in my professional opinion, crazy to try to argue that there's no reasonable basis to take this position.
Mhm.
And so if the IRS were to say that to you as a taxpayer, then you would appeal that decision and you would say, hey, I don't agree with that. Here's why there's a reasonable basis. And you can dispute those penalties. So they may try to assess penalties. You would have a really, really good argument to dispute those penalties and likely have them removed. So that's kind of the real, I think, important point as a taxpayer to remember is that you're not guaranteed success, but you are almost, I won't say guaranteed because, right, you never know, but you have a very good chance of not having any punitive action taken against you for taking these positions, which means you're more or less kind of this in the same position as if you did not even try. And the upside of the position is you may get really big refunds. You may pay a lot less tax and it may not be disputed. And we've seen that happen many, many times at this point.
More often than not.
Yeah. So
Um,
I think that answered the question, but you can take it. Recreational operators can take these positions. We've been doing it for our clients for about 3 years now, I think, with a lot
Moving
of
forward
success.
without reducing deductions, we've had 100% successful filing
Mhm.
rate, I guess you could say, processing. Going back, it's been mixed, kind of
Mhm.
depending on the type of entity and the type of refund or
Mhm.
the type of remediation we're trying to go for.
One
But
thing I'll add is just very important. I always like to say this, is that in order to meet that reasonable basis standard, you do need to have a proper disclosure included with
yeah.
your return. So that can make or break your position. Is if you take this position and you don't have a disclosure included with your return, then you could be looking at penalties.
Mhm.
So that's important to remember.
Yeah, that's important. Another question that I get oftentimes is like whether or not an opinion is required. And I was just talking to a gentleman who engaged with an attorney to do an opinion. And it was going to be, a fairly substantial price tag. And then that opinion goes to the accountant, and then the accountant files the tax return with that opinion. Now, they were already in a position where there was an IRS agent that was attempting to collect from them. And so I kind of concluded that, like, listen, if you got an agent that's already there and whatnot, and he's already engaged in the to get the opinion, I think like an opinion is like a 75-page document. It
Mhm.
looks pretty, I mean, that would look pretty good, pretty intimidating. So it's kind of like, well, I mean, you're, I think it's going to have more weight just by the looks of it.
Mhm. Mhm.
Our disclosures are what is required. They're minimal 3-page to 5-page documents that we include. It is enough. You don't have to have an opinion. But if you're seeking for refunds that are of a size that might attract the attention of the IRS, then
Mhm.
maybe an opinion would be better. I believe it was $2 million, right? $2 million if you're an individual or looking for refunds, $5
Mhm.
million if you're a corporation where you might need to go through some sort of review process with the
Yeah,
IRS.
yeah, it's
Yeah.
yeah, it's those 2 and 5 million thresholds. That would be per return per year. So it's not like cumulatively, let's say you're amending maybe three returns all at once or something. If one of your returns is, requesting a refund of 5 million or more for a corporation or 2 million or more for an individual, then it goes through a second level review called a joint tax committee review, and it's like a more intensive review. And if you're expecting to go through that, I think having a tax opinion ready is probably a good idea. Probably a
Yeah.
good
Yeah.
idea.
Yeah.
Because you do want to be able to defend it, defend the position. But if it's, they're very expensive, right? So taxpayers can only do what they can do with the resources they have available. And I think there are it's not cut and dry, it's not black and white. You don't have to have an opinion to move forward with this if you can't afford one, right? It's not like unless you have $100,000 to spend on an opinion, then you're out of luck. There are other options available.
Jamie, let's talk about TerrAscend again.
Yeah.
They was it TerrAscend that got a bunch of money back um, and now the IRS is attempting to claw back like $8 million.
Yeah.
And
TerrAscend
that's
is
been in
the
the news.
Yeah, that's in the news. It's the first, at least, case that we know of where the IRS has actually issued a refund related to a no 280E position, and then has attempted to claw that refund back. And so we've talked about this in our webinars that is a possibility, that is a risk of these positions, is even if you file an amended return, you get a refund, and you're successful, getting that refund, there is the chance that the IRS could decide they want that money back. So it's not completely put to bed once you get your money. And so they have 2 years to do that. The IRS has 2 years after issuing the refund to say, hey, we actually issued this erroneously. We shouldn't have done it. And we want the money back. And then in those cases they also charge interest on the however long that money's been, in your hands.
Mhm.
So TerrAscend got an $8.3 million refund, and then just before that 2 year, my understanding is pretty close to when that 2 year statute was going to expire, the IRS came back and they said, actually, we want that money back. TerrAscend said, no, we don't want to give you that money back. And so then the IRS, initiated a lawsuit, or the DOJ, I guess technically it is,
Mhm.
initiates a lawsuit, suing the taxpayer for that refund back. What I think is really interesting about this one, like I said, I think it's, as far as I know, it's the only one we've heard of, the only case.
Mhm.
We've heard of lots and lots of refunds being issued, right?
This is the important part. I know where you're going,
113
but I
million.
want to
Yeah.
say, I want to
Um,
point out this is the important
yeah,
part.
and it was a good segue because we were just talking about that joint tax committee review. So this refund of $8.3 million, right? More than that $5 million threshold we were just talking about that requires that second level review. The IRS just failed to do that. They didn't put it through the Joint Tax Committee review. So I think it's interesting because they are, in their lawsuit saying, oh, it's erroneous because 280E does apply. But then they say, and also it didn't go through this review. And so it's not just like, oh, just 280E applies, but they're able to also kind of fall back on, we didn't follow the proper administrative process. And so therefore we need that money back. Um, and that to me just is like another example of like a long history of examples where the IRS has chosen very specific taxpayers to kind of make an example of and try to set precedent with, right? Where oftentimes, as we saw, like as we've seen in kind of tax court cases throughout, like the history of state legal cannabis operations, is oftentimes the taxpayer fails to support their position for reasons completely separate to 280E, right? So they'll choose a taxpayer that has poor books and records, or they'll choose a taxpayer that, for whatever reason can't substantiate their position, regardless of whether 280E applied. And then they might not get into detail about 280E, but they'll also say, oh yeah, but by the way, 280E applies. But they've never had to really explore in depth the positions of when 280E applies and when it doesn't. And they're able to kind of just make an example of someone. And this feels similar to me in that
Mhm.
they didn't just choose anyone, they didn't choose like Trulieve, right, which got $113 million of refunds, and they're not trying to claw those back, right? Because that probably went through the proper Joint Tax Committee review process. So they don't have that second little thing to fall back on. Um, I don't know all the details of it all, but that's,
Yeah, I was
a
just
bit of
looking online to
speculation.
see what the specific status of that case is. Um, it says
I
it's
don't think there's
just
been a lot of updates
there
yet.
hasn't been any updates.
Mm-mm.
I mean, I feel like the IRS does so how the IRS enforces the law is through deterrence.
Hmm.
Um, and they have a history of throwing out like strongly worded emails, regulation. Uh, a guy who spoke at a marijuana-focused accounting company, one of the agents scared the bejesus out of all those accountants by saying this, this, and this. Your clients are going to, if you try to challenge 280, you're going to get your clients audited up, et
Hmm.
cetera, et cetera. And it was enough to make the news and just scare the bejesus out of everybody, right? Um, this is, I think, another one of those situations. And then it's like, okay, well, we did what we needed to do, which was scare everybody. Now we're going to drag our feet and the process for as long as humanly possible, even beyond risk scheduling, so
Hmm.
that people lose a little bit of the energy behind it, stop trying to challenge the IRS, allow the statute of limitations to expire, and then say, okay, now
Hmm.
it's okay to amend your returns. And now you guys are just like shit out of luck, essentially.
Right, right. Yeah, so
So,
that's an important point is even if ultimately it's decided, at some point in the future, yeah, we should allow these refunds for 280E and we should allow amendments, and that becomes official guidance, which probably is not likely, but could happen. Even if that becomes official guidance, the statutes of limitations will kind of trump that, right? So if the statutes of limitations are expired, it doesn't matter that the guidance is you should have been able to amend. It's too late to do so. So in that case, a taxpayer needed to have preserved their statutes of limitations, kept them open in some manner. Otherwise, they close. And so
mhm.
one way to do that is with a protective claim for refund, which is basically where a taxpayer either can write a letter or prepare kind of like sort of a draft tax return and say, hey, I'm going to submit this. We're waiting for some law to be settled. And I want you to just like kind of keep this on file until the law is settled, and then you can process this. And in the meantime, the statute of limitations for that tax year won't close. Um, that's one way. Um, And then another way is just to go ahead and amend, and then you see if you're successful or not. And if you're not, then you can go through a process of trying to preserve those statutes of limitations. You can appeal your decision. You don't have to just agree with it. You can appeal it through an administrative appeal process. And then you have 2 years from the date of that decision to, just like the IRS has 2 years to claw back that money, you have 2 years to dispute their decision. And you can request that that 2 year time period be extended. And so that's kind of out what we're doing for our clients right now. Is if we get a denial,
For those that did receive
yeah, for
denial,
anybody that, right.
which is when the IRS says you've
Hmm.
we got your amendment and we're saying we're not going to process it.
Yeah.
We're refusing to process it.
Yeah.
Um, Versus a lot of people, at least the people who get upset at us, tell us we're going to get all of our clients audited.
Hmm.
Knock on wood, that hasn't happened yet. So,
Mm-mm.
and that's
Yeah, we
also, it's interesting about an audit. Like, audits actually kind of give you a little bit more of an opportunity to go to tax court to defend your position or to even get refunds. So that's what happened with New Mexico Top Organics is that
Mhm.
ordinarily, if you want to get a refund right now without having gone through an audit and they say no, then until something change, if something changes like legally, then that's a free pass, right? But if the IRS hasn't allowed us to like say amend, we want a refund, then we would need to go to district court, federal district court, which is kind of interesting. Like you don't go to task court, you go to federal district court. But if you're audited and you want your refunds, it's a free pass to go to tax court, which is kind of interesting. I don't know exactly the process, but it's never been litigated in federal court, from what I understand. The
Mhm.
specific statutory, basing the lawsuit on the statutory language of 280E and all that. The same as what New Mexico Top Organics is arguing. Sorry, I digress
No,
there.
it's all very interesting. Yeah, we've heard from attorneys and stuff who recommend, you know, people who are willing to do it, to take it to court. They want you to go to different districts and do it in different areas because, and this is like way above, kind of above my head. But
Mhm.
it's like different districts can have decisions on it and they don't necessarily help people in other districts, right? And so until there's, maybe three districts that all have a decision that's, let's say taxpayer friendly, a happy decision for a taxpayer, that's when maybe the overarching position of the government might change, right? But it takes a while. So they're encouraging fight this like as much as possible. But a lot of people don't have the resources to fight it, right? And so
No,
if you don't have the resources to fight it, then I think that's okay. And you don't have to, you can take these positions and then you can kind of like throw your arms up at any point in the process, right? And I think that's important for people to know too. You can get a denial and decide you don't want to fight that and just accept it, or you can do an administrative appeal, which is really just a letter, and try to like keep the process just kind of going, keep the statutes open. Um, you don't have to take it to court just because you took this position if you find yourself in a position where the IRS denied it. And I think the IRS's official position, just kind of going back to that question, like can they deny it just because rec is still Schedule 1? And the answer is yeah, that's kind of their official position, is they say until it's rescheduled and it's listed on Schedule 3, we think 280E should apply. And then we're coming in and saying we think that you're interpreting the law incorrectly. And that's what we're asking them to reconsider that. But so far they haven't been willing to reconsider it. However, we have seen a lot of the amendments be accepted, which is kind of interesting. And so that's why New Mexico Top Organics is such an interesting case. That's the case that's currently arguing whether, the interpretation of the language of 280E, because a court could force the IRS to accept that position, right? It's not the IRS who decides, it's like the courts who decide and who ultimately interpret the law. Um, so we'll see.
and Nathaniel Pollock, who's the representative for for New Mexico Top Organics makes some really beautiful arguments in the
Hmm.
court case in the brief that he wrote
Hmm.
about the language of 280E. And I'm going to just remind people, please consider asking some questions. Otherwise, I'm just going to keep talking, and because it's really interesting. And we try
Hmm.
to jam a 1 hour, like 3 hours of information into a 1 hour session. It never works. So here we are continue to talk about it. But I really, so the big debate is based on that language within the meaning of a Schedule One substance, right? And Nathaniel's argument, he includes documentation, like other court case precedents that said that the courts have to base their conclusion on the plain language of the law, right? Or the Congress, the plain language, or when Congress is I can't remember which it is, but when Congress is writing law, it needs to be plain language. And the 280E says that 280E applies to businesses trafficking in substances that fit the meaning of. And so there is like a debate as to, or at least that's where the debate is like, what did Congress mean by within the meaning of? But
Hmm.
so the IRS is saying classified as, right? The IRS says that what fit the meaning means is classified as, right?
Hmm. Hmm.
It's listed in there. It's listed on there. Um, and and but that I don't know. It doesn't seem the same to me.
Well, yeah, I mean, I think that that's a fair interpretation because the IRS, what they're saying, right? Especially
Okay.
they go into it in more detail in their briefs in this court case, but they
Yeah.
basically say, who are we, the IRS, who are we to decide what fits the meaning or what doesn't? Like that, like we're not, like scientists or whatever, right? Like we can't,
Yeah.
we're just reading the law. And the easiest way for
Right.
us to determine what fits the meaning of a Schedule One or
Exactly.
Two is
Mhm.
what's listed. And then the counter argument is that this is like a unique scenario where the federal government itself, different departments of the government, has actually reported officially that cannabis does not fit within the meaning of one or two and should be rescheduled. And so it's not such a far stretch to say, IRS, you don't have to determine it yourself. You just have to listen to the scientific body of, your own government, and you just go on that, right? Because the Controlled Substances Act is ultimately like it's a scientific type of categorization. That's what is meant to happen, right? Those are the criteria that categorize different substances differently. And
Yeah.
so that's where they're kind of right. That's the argument, and they're fighting it
Well,
out
and I
in court.
remember my point. I didn't mean to get off, but my point was that that's why going to a federal district judge could be super helpful here.
Hmm.
Because one of the IRS's rebuttal to that argument is that, well, fit the meaning is used in the tax code to refer to other definitions of, like, so
Hmm.
fit the meaning of married filing joint, for example.
Hmm.
Well, you got to go now to married filing joint, and then that's where you find what is fitting the meaning of
Hmm.
married filing joint. And then, of course, that doesn't really close the whole.
Hmm.
It doesn't end the debate there because you could go say like, well, Schedule One of the Controlled Substances Act. Well,
Hmm.
that says highly dangerous, highly
Yeah.
addictive, no medical benefit. Or you could say, well, classified, like
Hmm.
the
Well,
substances are classified. So,
yeah,
but
Nathaniel
if
makes
but
really
in
great
federal
points.
district court, it would be different, right? They don't speak tax.
Yeah, and Nathaniel makes really great points. He calls out different parts of various law that use the specific wording of
Yeah.
listed,
Mhm.
as listed or as classified versus within the meaning. And I think he even was actually the one to call out various tax law that uses within the meaning to refer not to like a distinct list that's already been categorized, but to criteria. Again, even like that married filing joint example, I think it was referring to criteria, a list of criteria
Mhm.
that then determine whether an individual fits that
Yeah,
meaning.
that
And
exactly.
and
Verified
that's
billing is
his
a
point
criteria.
is they should
Mhm.
look to the underlying criteria that determine schedule one, two, or three. And if you look to those, that's where marijuana fails the one and two tests. So
Yeah.
that's it.
I feel like it's really strong, like it's just, but we've talked to many attorneys and like some of them will say things like, you know what, it's like a 50-50. You could
Hmm.
have a really good, like clear, logical argument and the judge ignores it, or you can have a shitty argument and then the judge rules in the favor of the shitty argument. So I don't know, it's pretty much
Yeah.
from there, but I think it's a mistake to just do nothing though.
Hmm.
That seems to be like from what I can tell.
Yeah, I think people should make some informed like risk benefit analysis, right? And determine I think there's a real defensible position to be taken, and then a taxpayer decides whether that's worth it to them or not, right? Whether they want to open up all of the risks, and there's a pretty big like spectrum of risk, but I think the likelihood of some of the risks is very, very low based on, my practical experience and professional experience.
Mhm.
So like audits and stuff, yeah, there's always a risk of audit. We've seen very little of that happen, at least for kind of like small to mid-sized taxpayers, which means taxpayers that have like $30 million in annual revenues and less, right? So that's pretty big from like a normal person's perspective, that's pretty large. It's a pretty large taxpayer, right? Um, those there's
Unless the
been
tax returns are poorly prepared, then they can
yeah,
become like a little bit of a liability to those
right,
people. Because we
right.
have not our clients, but we've definitely represent or we work with people who have been absolutely hammered by the IRS because the
Hmm.
tax returns were prepared so poorly.
Yeah, so you want to have accurate tax returns. You want to have good financial records and accounting records to back up your tax returns, regardless of whatever position you're taking. You want to have that because if the IRS does happen to kind of come at you, if you can provide them with backup, that will, fend them off pretty quickly. You're like,
Yeah.
here's all my working papers, here's my financials that match the tax return and here's the position, the reason I took this position. They're like, oh, okay, great. And their IRS agents are just people trying to do their job, right? But so if you send them something and it doesn't substantiate what you did at all, they're going to say you don't get anything. Like the New Mexico Top Organics audit originally disallowed all of their cost of goods sold because the IRS claimed
It
that they
disallowed
couldn't
everything.
they couldn't substantiate the cost of goods sold. So it wasn't a 280E issue. They just said you can't substantiate any of your expenses. So we're not going to give you any of those. And they did not they were not successful with that. So but it's an interesting thing to consider, right? Like your risk, every taxpayer is on kind of a risk spectrum already based on how they're keeping their financial records and how organized they
Yeah.
are and all that.
One other topic that we could kind of revert to that, like I think is good to talk about is the protective claim for refund. Like
Hmm.
we do those letters as well, but why do we prefer amendments versus doing protective claim for refunds? That's
Yeah.
always like something
Yeah.
is a question.
That's a great question. I think one of the reasons I prefer amendments, well, there's kind of like two, it's like a multifaceted reason, but one is I don't really have a lot of I'm not that optimistic that we're ever going to receive clear guidance that we can amend tax returns and
Mhm.
recapture deductions for years in which marijuana was not scheduled as Schedule 3. I don't know that we're ever going to receive that guidance, even though I would love it if we did. I think it's the right decision. I'm not very hopeful about that. And so if you do a protective claim, it has to ultimately be determined that your position is allowable, and then you can, take that position. So I think I don't know if I think the likelihood of success is lower. And then with amendments right now, you just as a taxpayer have the potential of getting your money right now. You just you can just get your money right now, which is really nice instead of just
Mhm.
waiting. So that's
It cleans things up too. If you like have a big liability, assuming you're not already in collections, because that does create a little bit more of a
Mhm.
headache if you have to report directly to an agent.
Mhm.
Even then, some of the agents will allow them to go through because they want to get you off their desk. They want to get you in compliance.
Mhm.
Um, but it's never a guaranteed.
Mhm.
It seems like we were visiting with somebody who it was a collections agent that just they got a hold of it and said, we're not filing this. So that's a problem. That can be a problem.
Mhm.
Um, it could all be a problem.
It can all be a
But you
problem,
kind
yeah.
of end up just back where you were, right?
Yeah.
And the statutes remain open.
Hmm.
And then we can do a 709. We can, continue to keep the opportunity open to take it to court if we need to. But it's more a matter of like, well, let's just keep it open so that we
Hmm.
can then, go through the
Hmm.
appeals process. Or if we do take
Yeah.
it to court, it's going to pass because it's now we've got some sort of actual determination that has allowed
Right.
us to do that.
I also have kind of a hard time having a lot of faith in just the IRS's kind of administrative operations as well. When I think of
Oh
like
my
a
God.
protective
Yeah.
claim for refund and that somehow being actually recorded correctly, like I think if I were to call the IRS 10 times, I would probably talk to one agent that knew what a protective claim for refund was.
Mhm.
Um, and so I think I don't have a lot of faith in that process because we file returns frequently that just don't get processed and we have to follow up with the IRS and we have to fight them to process them. Um, you know, you can't file it, you can't e-file a protective claim as,
Mhm.
you can't do that. You have to paper file it. Their paper
There's
processing
no proof that they
is a
received it.
nightmare. They don't give you proof of things, it's just really difficult these days to interact with the IRS. So,
Mhm.
um, yeah, it's not necessarily a bad route to take. It's a conservative route. It can protect the taxpayer, but I don't know that it would be an easy route because you would have to somehow prove that you did do it, and they'll come back probably and say, "We don't have a record of that." You'll have to provide
Yeah,
proof.
I mean, yeah, it's like anything.
Hmm.
We're always resubmitting information. There is like the taxpayer advocacy. I mean, there are ways to get through. It's just a long drawn out process that
Yeah.
take years, like even
Years. Yeah. And a
taxpayer
lot of your time
advocacy
and
takes
energy.
years. So it's like
Yeah.
years on years of like
Hmm.
waiting and it's better than nothing. The
Yeah.
protective claim is better than nothing. But
Yeah. Definitely.
all right, well, I feel like we exhausted
Yeah,
that.
I'm
Is there
surprised there's not
anything
more
else?
questions. Maybe we'll encourage everybody one more
Wrap it
time
up
to
for the
ask a
day.
couple questions.
No,
Maybe anybody?
well, we haven't had any new ones lately, so
Well, our anonymous attendee introduced themselves as Casey, maybe Cassie. I don't know how
Casey,
to pronounce it. So thank you for your
Jade
questions.
Vine Consulting.
Jade Vine Consultants. Yeah.
All
Thank you
right,
for your
Jamie, why don't
question.
we just get back to work then?
All right, sounds good.
Okay, and feel
Thanks,
free
everybody.
to reach out to us through our website. Many of you probably are clients or know us outside of being a client, so feel free to email us if you have any additional questions. All
Okay,
right,
very good.
very good.
Bye,
Thank you.
everybody.